Hi, I'm going to show you how to live dangerously and also answer a very important question that's being posed. Let's roll the intro, tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader, which you'll probably figure out if you see some of the other videos. And what I'm trying to do is put trading in the real world. Show you a little bit about what I do for a living, the antics that goes on in this office, because we do clown around quite a bit, and maybe show you a tip or two along the way. But before the intro, I said I'm going to answer an important question. I'm going to jump on the whiteboard in just a second. And also how to live dangerously. Well, I might be 6 foot and touching 20 stone, but this is exactly how you live dangerously. Oi, Winky!
Yes?
Love of my life?
Yeah.
Put kettle on for us, mate. Say that.
Look yourself! The kettle's behind you.
Say that. See what she did straight away. Soon as I said that, she hit me. It's just as well that I'm big and I can take a punch. But I do like it. Go on, put the kettle on and I'll make some money. Good girl. Okay guys, so what we're going to do is we're going to answer quite an important question. But also hang on to the end because I got a fantastic surprise this morning. And we filmed it for you. So something to look forward to. Certainly made my day. But back to the question. And the question was posed by Krish, one of the long-time subscribers. And I genuinely thank you for this question because it's excellent. But while I'm giving a couple of shout-outs, there's a couple of new squad members, David Adams, and somebody who could possibly be a Marvel superstar, Johnny Vico. What a name. Welcome aboard, guys. Genuinely thank you. But back to the question. Now, I've spoken with Krish many times, and when he posed this question, it triggered something in my mind as to the way that I look after my money and money management. Okay? And his question was quite simple. Should you take your profits out of your trading account? The short answer is yes, most definitely. If you haven't got big discipline, do it weekly, certainly monthly, and if you've got massive discipline and you're a longer term swing trader, possibly quarterly. But there's a couple of caveats to that, and I'm going to go through it. Now, the way I look at your trading pot is slightly different to what some other people look at it. To me, it isn't money, it doesn't exist. It is a tool for me to conduct business. And it's that simple. All right? And because it's a tool, I don't look at it as winning and losing. I just look at it as wear and tear. And I know that might sound odd, but that's because of my business background. And I'm going to do a video shortly on the way that I look at a market and how I treat it. Because I treat it a lot different to what most traders do. You know, because most people, they're all about these win rates and the sort of R&Rs, your risk to reward, all of that. Personally, I think it's fabled. I really do. You know, it's borderline gambling, a lot of it. And that is not what you do in business. In business, you take calculated risks. And this is what your trading pot is part of. Okay, so it's a tool of the job. Now, I've broken into two categories. You've got the major negatives and then the way to control it. And what we'll do is we'll look at each individually and then I'll give you an idea of how I look at my trading account. Well, firstly, the negatives are why you should be taking out your profits. You see, number one is temptation. If you've got a lot of money in your trading account, the temptation to use it is always there. So your business plan might be to take 3 trades per day or per week, whatever it happens to be. But what if you've got a lump of money and you see another setup? FOMO kicks in, the fear of missing out. So you'll take an extra trade. Or you might even force a trade that isn't really that good. So temptation is an account killer because it breeds over trading. So you need to remove that element. Okay? Which kind of counters up onto that section there. There to lose. Because there's another part of your psychology that just thinks, well, if it's there, I can spend it. Well, it's not there to spend, it's there to use. And there's a slightly different way of looking at it. You're using it as a tool to open up part of a trade that's part of a business plan. Now, if you're thinking, I can just spend it, like you're on holiday and you've got your spending money in your pocket. And I've done it because you go wherever you happen to be, Florida, Spain, or even Scarborough, you know, but you took your holiday spending money with you and you get to the last couple of days of your holiday and you've saved £300 or whatever because you haven't really spent a lot. You go mental and you just spend it because it's in your pocket. That's what your trading pot can do to you. You know, you can just think, well, it's there, spend it, use it. So again, it breeds over trading. And over trading will kill your account. And then there's the last part. Risk. But risking what? It's actually broker risk. And I know you'll scratch your head and think, well, I don't quite understand. Well, think about it. If you've got a large 6-figure account, like what some traders do have, and that business goes bust, it's a hell of a lot of money to get back. And it takes a long time to get it back. And this is assuming that that broker is regulated. Now in the UK it is, and you're protected to quite a hefty amount. But it's a long drawn out process. But what if you've got one of these offshore brokers that are, let's just say, a little bit ropey, and you put 50,000 in or £100,000 in, and they skin you alive? You know, thank you very much for depositing that in. Champers tonight, business is gone tomorrow. So you're actually putting your wealth at risk. So they're the first 3 warning signs for your account and how to protect your account. But once you've kind of push them to one side and you understand why you're taking the profits out, you then have to use those profits as a tool. And that's where the other side of the equation comes into it. You see, if you only hold in the account what you need to operate your trading plan, it controls your trades. And that is a good thing, you know, because if it isn't there to use, it stops you. And that's what you need. Sometimes you actually need somebody to grab you on the shoulder and just say, no, you can't take this trade. Stops you everything. And that pulls it down onto that, see? Number of trades that you can take. So if you only have a business plan that has 3 trades per day, you only hold in enough money to open up 3 trades. You know, so say the margin on a pound a point is 500 quid for argument's sake. Your initial starting grid is £1,500. That's what you put in, okay? And that controls the margin, so you know what the margin is. But you also need a bit of a buffer, which is the next part. This bit here. And the buffer is to allow for your stop losses and for the inevitable losses you're going to take in a month. You know, and I know you scratch your head and think, well, how do I work that out? Which it's quite simple, and I'll draw it on the board in just a second. But then also, why not have a little savings account that's in your normal bank account, not attached to your trading account, and that's your reserve. let me write this down. I'll give you an example. Okay guys, so I'll draw it on the board roughly how I control my personal trading account. That might give you an idea of what I was trying to get at. Okay, so I'll break it in half essentially. So I have one pot here in a bank account, savings account, and then I have another pot in the broker. So that's savings and that's a broker. And in my eyes, they are connected. That is my entire trading pot. But in the broker, I only hold enough money that I need to carry out my business plan. So for argument's sake, if I wanted to have 3 trades running at any one time, whether it's a day trade, swing trade, whatever your business plan may be, and for argument's sake, say it costs £500 worth of margin to open up a single position, I need £1,500 to start with. But that only opens up the position. I've got nowhere to go with it. So I need a bit of a buffer, like what I said earlier on. And that buffer will just round up to £500, giving me a total of £2,000. So that's what I start every month with, £2,000, just for argument's sake. Okay. That allows me to open up 3 positions at a time, allow for losses and for stops for when the market moves against me in case I get a margin call. But we'll assume that we're working on 4 weeks. 1, 2, 3, 4. And this is how I would run the account. So the first week I've made £20 a day, so I made an extra £100. So week 1, my account now has 2,100 in it. All right. To stop temptation, I'm going to take half of the profits out. So I'm going to take £50 out, and I'm going to put it in my savings account. Right. So week 2, I am now operating with 2,050. Right. I did quite well. Right. And I made another £100. Just like so. Result. But I'm going to minus out another 50. Right. So I'm going to take £50 out of it again. So I'm going to put my 50 quid into my savings account. So this has grown. So now 2,100. So that's grown and that's grown. But then I've had a bad week. Lost £200. Terrible. So I'm starting my next week at 1,900. It's still enough to open up the 3 trades. Has a little bit of leeway for stop losses, etc. But it means I have to think carefully about what I'm doing and take the exact trades that fit the criteria of my plan. So I can't make any mistakes in week 4, and I'm confined to the amount of money that's left in that trading account. But because it forced me to look for the best trades, I did incredibly well, and I made £300. So I end the month, I'll just put it up here guys, 2,200. Done really well out of that. I can then take out 100, put it up into my savings account, which gives my savings account £200. Fantastic. So what I've done at the end of all of this I have now increased this for the new month to 2,100, so I can have small growth, controlled growth in the trading account, but I've also put £200 away, which is protected. Now, if everything goes catastrophically wrong, I can always fall back on this to come for another day. But starting with 2,000 and taking my profits out controlled what I was doing. You know, it made me look for the best setups, stopped me over trading, and took away the fear of missing out. Because if I'm maxed out, I can't do anything. I'm stuck. But if I left all that money in that trading account, the week where I had a colossal loss, I may have fallen into revenge trading. And instead of losing £200, I could have lost a hell of a lot more. Because so many times you'll build an account up and you give it back to the market because you think you're invincible. But if you've removed the profits from the equation, you can't think like that, because you've got to do certain actions. You've got to log into your bank account, you've got to transfer money over, and assuming the money's transferred into your account instantly, but sometimes it can take 2 or 3 days. So it stops you doing it. So it's a good thing. And then at the end of the month, you have a little bit of money left and you can draw whatever you want. Say £100, 50%. Give yourself a treat. Makes your trading worthwhile. You've still got a backup buffer. You've grown that account and you've controlled yourself. I hope that kind of makes sense, because that's roughly how I do it. You know, I break it in half. That's in the broker, that's in the bank. And I draw my salary from there. Simple as that. I've got my account to a level where I'm happy with the position size. I don't need to increase the position size anymore. I've got a good buffer that I can take extra long trades, you know, because I'm a big believer in wide stops. So I have a buffer that can take that. And if it goes catastrophically wrong, I have a secondary buffer that I can top up if I have a bad month. Simple as that, guys. So, in answer to the question, do remove your profits and grow your trading account slowly. Okay, so there we go. So now I'm going to jump into that stock room and I'm going to show you what turned up today.
What on earth has he been buying? Scruffy!
What?
What have you been buying?
I ain't buying anything. Oh, you bought the kettle on?
What's this?
Not mine.
It is, it's got your name on it.
Ooh, present, boys and girls. A box opening. Live. Not rightly sure what it is. Let us find out. At least I will do when I can get into it. Yeah. Is this a present from you?
It's not from me. I'll see it, yeah. Oh, wait there, wait there.
Just a second. Technical problems here. Try again. What on earth is this? Right. Bear with me. Get a look at this. Right, boys and girls, I'm not right sure how this works. Look at this. How cool is that? Oops. It's my very own life-size Darth Vader. Right, bear with me, this is going in the office. But I'll come back to you when it's in the office. But first of all, I need to kind of try and find out who this is from. But whoever you are, I definitely thank you. Well, there isn't any names on, so I really don't know where it's come from. But whoever you are, I am really grateful. Give me a second, I'll set this up and I'll show you where it's going to live. But thank you very much. But next time, if you get the gold bikini, that would make my weekend.
Really?
Not happening. I wish I was 20 again. She used to proper go for it. Right. See you in a minute. Well, would you look at that? Look. It's a full-size Darth Vader. It's massive. I'm not rightly sure where I'm going to put it, but I think I can get it hung on the wall. So bear with me and I'll get it pride of place in the office. So, found the perfect place for this. So come with me, boys and girls. Ta-da! How good is that? Darth Vader himself watching over the Forex world. Right down to my other Star Wars memorabilia. That is absolutely superb. Thank you very much.